This video goes out to everybody out there who has been sitting on the fence, whether it's about buying, selling, or investing in real estate here in the market over the last 3 to 4 years because of the state of the market. A lot of people are saying that the market is hyperinflated, that the market's going to crash, that they don't want to overspend on a house, that the interest rates are too high. I can go through and rattle off another 5 to 7 reasons why people are deciding to sit on the sidelines. Now, I won't disagree with you guys. Logically speaking, these aren't the worst reasons in the world to not go out there and buy a home. But let me talk to you about a couple things before making that decision as to why I think it's the wrong choice to make, and the right one is to get out there and do it if, and this is a big if you are financially prepared to do so. So, that being said, the first big one that everybody is saying has been the market is just too crazy. Homes are overpriced. I don't want to buy my house and then lose my ass on it a couple years down the line. So a couple things to touch on with that. First and foremost, if this isn't a house that you plan on selling in the next 3 to 5 years, even if we did have a market crash happen next year, it doesn't matter because you're not planning on selling the home anyway. If you're looking to live in the house for more than 5 years, it really doesn't matter because even though real estate has cycles, the majority of the time, and like 95% of all of history, if you go back and look, real estate over the long term continues to trend upward and upward and upward. Minus the years of 2008 to 2012, if you take those out, because there was a lot of illegal stuff happening at that time that caused all of that ruckus to happen. But if you take that out of the equation and you look at the trend over the period of time, back from the 1920s or however far ago in the past it was that we started looking and recording all of this information, you go all the way to present day, that line goes like this, with little tiny blips here and there, okay? But this is much like the stock market. You hear a lot of people say, well, I'm going to invest when the market comes down so that way I can buy at the bottom. I promise you, you are not smart enough to make that judgment call of when that's going to happen. I'm not smart enough. Warren Buffett wasn't smart enough. Nobody is smart enough to make that judgment call of when the market is about to crash because nobody knows. Nobody has a crystal ball and can see the future. So instead of waiting for that to happen, what you're doing is you're letting the prices continue to increase and increase and increase over time. I was one of these people that decided to jump into the market in the thick of it, in the middle of 2021 when people were putting in 17, 18 offers on a singular property. I beat out 10 other people. I was the 11th offer on my house, and I got it over everybody else. I paid $223,000 for that property. That same exact property that I live in today is right now worth anywhere from $270,000 to about $290,000. And that's just in 2.5 short years. So keep that in mind that over this period of time, if you keep sitting on the sidelines, other people are taking your properties and they're the ones getting wealthy instead of you. As you continue to pay rent or stay in that house that you hate, whatever it is, keep that in mind in the back of your head. The other big one that you always hear is interest rates, Adam. I'm not going to buy a house when the interest rate is 7%, 6%, 5%, whatever that interest rate number is for you that makes you feel like you're getting a good deal in your head. Well, what I can tell you is as those interest rates come down, that competition level is just going to keep increasing. So you're either going to pay a higher interest rate and have less competition, or you're going to pay a lower interest rate and have more competition. Either way, it's either going to happen in the sales price or the interest rate that you pay. I would always prefer for you as a buyer to pay it in the interest rate rather than the sales price because you can always change the interest rate later on. You can't change the price that you paid for the property no matter what you do after you buy it. So keep that in mind as well when you're thinking about holding off because interest rates are high. Here's the other little hidden benefit as well. If you're a conservative person like myself, you want to get approved for the house at a higher interest rate because if you can afford it with a 7% interest rate, just imagine when you refinance down into a 4.5 or a 4.75. You're going to be able to keep the delta between those two numbers, lessen your monthly bills, and create more financial independence for yourself in the long run of this. So what I do when I'm looking whether something is a good investment or not, for me, whether it's my primary residency or an investment property that I'm buying, I'm thinking, is this going to be a good investment for me 10, 15, 20, 25 years down the road? Because just like most people out there, the properties that I buy, I'm not selling them in the next 3 to 5 years. I'm probably going to hold on to them for at least 10 just so I can get the tax benefits of depreciation from it. So taking all of that into consideration, whatever the market's doing right now isn't going to matter in a decade. I promise you we'll be in a very, very different place. Go back to 2014 and see where we're at then and tell me that it's not substantially different than where we're at now. So making these short-term decisions based off of the short term of what's going to happen to the property, even though you plan on holding it for a long time, is counterintuitive to the type of investment that you're making. If you're investing for the long term, you need to be thinking on the long term, not a short term horizon. So again, I know this is a little bit of a lengthy video, but if you stayed with me till the end and you keep all of that in mind, I hope that's good information for you to hopefully get you over that hump and get out there and take some action and start making equity in your home.